Well, good afternoon, everyone. It's 4 o'clock here on a very humid day in West London, and it's Tuesday, the 2nd of August. Well, the S&P doing its best to hold on to gains. Nasdaq up a little bit. The Dow Jones down 0.5%. Of note, ladies and gentlemen, is that the longest term measure of the trend on VectorVest is turned to up, and this confirmed up signal fires when the VectorVest composite of the US, an equally weighted index of all of the shares that we follow in the US, is up for 2 5-day periods in a row, and the buy-sell ratio is greater than 1. The number of shares on the buy recommendation divided by the number of shares in the sell recommendation, and the buy-sell ratio of the BSR has in fact climbed very strongly over the last few days and sitting at a level of 1.3, and it's moved from a mega oversold situation relatively quickly. So the short-term trend is up, the underlying trend is up, and the longest term measure of the trend on VectorVest is up. So VectorVest advocates buying safe undervalued stocks that are rising in price at this time. I've only got one position in the US, and that's a position in builders. The results yesterday were pretty good. The rationale was relatively simple. If I take off this for a second, it pulled back in 5 waves. It's a very deep flag, but nevertheless it is a flag formation, and it stopped at pretty much exactly 78% of the last range, which those of you that know my work will know that that's a number that I favor. There was also a confluence by the shouting of that old high. I thought that was useful. That was smart money entering the fray. Take off the moving averages for a second. It moved up very nicely, but the general market was doing nothing there. Now, for my swing trades, I use a medium-term market timing signal called the DEW, and the DEW fired on the 19th of July, and I bought into the share at 65. It gapped up yesterday on really good numbers. My stop loss is at entry, and I'm hoping this is going to break up out of this little inside day. If we put on volume, we can see there's a huge break on rising volume, and on the few days before that you can see volume was rising. Now this is really interesting, ladies and gentlemen, because in the last little pullback where prices pulled back, you can see volume contracting. And that's a clear sign, at least a clear sign to me, that there's no sellers around and that anybody who wants to buy it has to pay more for it. As you can see on the way up here, these green bars, you see volume expanding. And eyeballing volume and price together is a great edge for me. So when I see that the price is rising and the volume is rising, that's good. If I see the price pulling back and the volume contracting, that's also good for the bullish case. So today it's early. It's only an hour and a half into the trading day, but if this is a low bar, I would be very happy with that, because that's saying there's no sellers up there, and the technical target from this is one heck of a long way up the page. Okay, so reasonably happy with that. Anything can happen. It only takes one idiot somewhere in the world to stuff your position up. Is this market going to move up from here, or are we in the throes of a bear market rally? Well, I just don't know, folks. All I've got to do is to try and take my signals. This is the longest term measure of the trend on VectorVest. That's the confirmed call signal that fired last, I think it was Friday night, the 29th, yes. That was a darn good signal to get out of the market on the 12th of April, and this is the first signal. So the market is moving up. It's moving up on increased participation, where there's more buys than sells. That's a good sign. I wouldn't be at all surprised to see some backfilling around these levels, but as I say, the only reality are my signals. If I haven't got those, I've got nothing. So reasonably happy with the market. So if I have a look now at the intraday picture, this is an hourly chart of the S&P 500. I've had some nice trades in this, nothing really to do with me. It was rising. Yesterday was a absolutely textbook spring. There wasn't that much in it, but nevertheless there was enough in it for a reasonable afternoon. Today the market did something I always like this, when it came back today and didn't quite clear that low, and then went up a little bit and came back to the orders. And meanwhile, my dear old friend, the stochastic, was in fact showing marked reverse divergence. And that's something that I teach in my swing trading courses. So I thought that was worth having a go today. That should stop down there. That's reversed. It's bullish reverse divergence. Some people call it hidden divergence. And now we've got this huge outside bar. It's an hourly chart. This huge outside bar. We shall see. It was up at 24 at one stage, given a little bit back. I'm long from 91, and my stop's also at entry, and I need to take a little bit relatively soon. Always good when you see the market coming down and running stop losses and then going the other way. It's always a good sign. Do my best to hang around for as long as I can, but not outstay my welcome. They say that you should get to the party fashionably late and leave before the police arrive. So that's what I'll try and do. Another position in gold. I've been talking about it, and I don't know whether I mentioned it here or not, but I certainly mentioned it in the VectorVest Q&A session that I did yesterday afternoon. I had an exit order to get out at these lows, and that hit in the last couple of hours. So 1785. So long from 1717 to 1785. A good trade, and made up for all the times that I got stopped out as it was falling. I think I got stopped out on that one gloriously, just there, but I made that back. I'm very positive on gold, but I think it needs to pull back a little bit first. To me, it looks a little bit short-term overbought, and if it were to pull back and have another go on the upside, then I think that's when the really big move will occur. So gold looks good to me, it really does. So in the UK, I have one gold mining share, a South African share called Pan African Resources that I know very well. So everything firing in the US market. If we have a look now at the UK market, and we can see that we've got a similar situation, and always good when the UK market and the American market are on confirmed ups. They're both saying the same thing. The confirmed up in the UK occurred a couple of days earlier, and as you can see, a great deal of green here. Short-term trend is up, the underlying trend is up, we've got the confirmed up, and the pointer of the old color guard, which represents the momentum of the short-term trend, very strongly up indeed, and that looks pretty good to me. So time to build positions. I haven't done as much as I should have. As I've told some of you, I haven't been that well over the last month or so, but I bought into Targela a little while back on the DEW signal. DEW signal invariably fires 3 to 5 days before the confirmed call, and it's a very useful market timing system for more aggressive swing traders. And I note that our Options traders in the US use the DEW to actually tell whether the S&P is going up or whether the S&P is going down. Airtel Africa gave a few of us a bit of a heebie-jeebies last week when it came off. I didn't think the numbers were that bad, but that 160 level seems to be hanging in there. I bought a bit of Games Workshop, so I've added to Games Workshop, and I added to, I think, Morgan Sindall and McFarland on the DEW signal as well. So holding these positions: Tongela, Airtel Africa, Games Workshop, Bloomsbury, Morgan Sindall, CCC, which I've been holding since March 2020. Marlow, not doing anything for me. Was a bit, I felt that should have moved already. Sylvania Platinum moving up with the platinum price and with commodities in general. That's McFarland. I bought into that support, and that's my old friend Pan African Resources, which is a bet on the gold market. So that's what I've been up to, folks. As I said earlier, we haven't got anything else apart from our signals. I don't know whether this is going to follow through. All I do know is what I was taught by one of my first desk heads. He always used to say, when it's time to buy, you won't want to. And clearly, all you've got to do is to have a glance at the front page of the newspaper to see all the bad news in the world, stagflation and all. So trends are up. If they keep going, if they follow through, and I would like to see the American market get above those highs to really get out of this, where this resistance, this support became resistance. Through that, then I'll add some more positions. I've been particularly slack in the US, and I need to work on that. So I hope you found this useful, folks. Nobody knows what's going to happen next. Get used to it. All you've got are your signals. I don't know. The cleverest fund manager in the city doesn't know. And as I've said 1,000 times before, that idiot jumping up on the TV every afternoon, he certainly doesn't know. All we can do is take some pragmatic signals and do our best to execute as best as we can. Thanks very much. Bye-bye.